Why are central banks around the world continuing to buy gold in record amounts and dumping U.S. treasuries? Do they see something on the horizon? And should we, ordinary Americans, be paying attention? Are central banks sensing weakness in the dollar and counterparty risk by holding it in reserve? If the smart money that usually run the printing presses are stocking up on gold, it makes sense that the ordinary investor prepare as well. So what is the future of money? And how can investments in scarce assets like physical gold and digital decentralized technologies like Bitcoin be used to counterbalance this constant erosion of our purchasing power? If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist, White House advisor, and author Jim Rickards, author and economist at George Mason University, Lawrence H. White, economist and investor Keith Weiner, and economist, financial broker, and author Peter Schiff.
I mean, one of the arguments that people can have against the gold standard is that look at how expensive it is to get gold out of the ground. And then if we're just going to stick it in another hole in the ground and no one's going to see it or use it, it's an expensive way to run the monetary system. Now, I think those costs are small compared to the benefits of having sound money versus all the losses imposed by the fiat system.
The value density of gold is definitely a factor. Karl Menger, the Austrian school, defines it as the most marketable commodity. We're physical beings that live in the physical world. There's a time when you need to be able to take your marbles home and not play in the system at all. But that means taking home a physical good. You're a physical creature. You live in a physical home. You need to take something home and say, I'm done. I've gotten final delivery, final payment. This is it. I'm holding it. And when you look at all the various commodities, people talk about crude as a currency, for example, crude oil. The amount of crude oil to be the equivalent value of a new car would be like a swimming pool. So, the idea of where would you like your convoy of tanker trucks to deliver your crude, sir, it just becomes highly impractical. I'm a big fan of kind of reducing things to something that's perceptually obvious. With the same amount of gold as that value of crude oil, would be about the size of a large format iPhone. You could stick it in your pocket and walk down the street. And so the value density of gold, is definitely a factor.
Monetary policy, the Fed and other central banks, actually the Fed's not the worst of central banks, but the track record of monetary policy is not very good. It's pretty poor. If you compare fiat monies since 1971, that's when the Bretton Woods system ended and we got pure fiat money, we've had higher inflation than we had under the classical gold standard. We've had a less predictable price level. And you see that in the shrinkage of the market for 30 and 50-year bonds. They've become very rare because nobody knows what a dollar is going to be worth 30 years from now. Whereas under the gold standard, you got a pretty good idea what the dollar is going to be worth 30 years from now.
As long as you have money that's backed with something of stable, reliable value that you can relate to other goods and services, then it can be the basis of medium exchange. I mean, modern technology does make it easier. Today, I would think that gold today, with the technology that exists, is easier for gold to function as money than at any point in human history. And that is the real advancement that we have. Whether it's blockchain or anything else, it's the ability to digitally transfer stored gold around the world. That's what is the evolution or the advancement of money. It's the improvement on what works. Gold has worked as money since it was first created. In fact, the most prosperous period in American history was when we were on the purest gold standard in American history. And I think that hopefully America will re-embrace that monetary heritage once again, and hopefully the rest of the world will also enjoy the benefits of sound money.
Currency wars arise in a situation when there's too much debt and not enough growth. Notice, how do you handle debt? Well, there are kind of three ways out. You can grow. You can actually grow and make enough money to pay the debt. You can default, not pay the debt, or you can inflate it, which is just a disguised form of default. So I inflate my currency. Here's that $1 billion I owe you. Good luck buying a loaf of bread because it's not worth very much. So growth, default, and inflation are the three ways out of debt. Well, there's no reason to default. I mean, why would you? If you can print the money, why would you default? Just print the money. So we end up with inflation as the answer. Fine, I can't control the world, but I can control my own portfolio. And converting central bank money, which goes by the name of dollars or euros, into gold is a way, in my view, to preserve wealth. As far as a gold standard is concerned, there's not a central bank in the world that wants a gold standard. You can be certain of that. My question is, are you at some point forced to go to a gold standard, not because you want to, but because you have to restore confidence in some kind of, collapse of confidence or systemic crisis, probably much worse than we saw in 2008? And the answer is you might. You might have to do it just to put a lid on things if you don't reform the international monetary system sooner. So we're stuck in this weak growth cycle. We're seeing lost confidence in central bank money, and that's part of what's driving the price of gold higher.
Gold has been doing what it does for 5,000 years, and the proposition is that it's going to continue doing for the next 100 years what it's been doing for 5,000 years. And in those 5,000 years, we have not reached the point where marginal benefit is less than marginal cost. At the margin, gold's utility is not diminishing. The nth plus 1 ounce has the same value as the nth ounce, which is saying that gold is the closest thing we have to an economic constant. Why is it important to have something that's an economic constant? What is the single most important thing that every business owner, operator, manager needs to know? Are we creating wealth? Are we destroying wealth? And how do we measure that? You need something that will give you an objective picture, and gold is that objective picture.
If you are concerned about your long-term wealth preservation, then the fiat dollar is clearly failing you. Gold is clearly on the rise and making historic highs. The 5,000-year history, gold is the one asset that has outlasted numerous business cycles, economic downturns, booms and busts, stock market bubbles, and the rise and fall of every currency. And unlike depreciating, faith-based fiat currency, gold is no one's liability. Gold IRAs provide a tax-deferred means of building wealth, storing it securely, as well as protecting your retirement and purchasing power from counterparty risk. If you are ready to start your gold investing journey, see the links in the video description to the best gold IRA companies that we have personally reviewed and vetted. Thanks for watching.